Thanks very much, Francis. Yes, well, indeed, we do have our own issues. Yesterday, a asset management company, Future Growth, announced that it would be withdrawing financial assistance, that is, loans to some state-owned enterprises. It says it's concerned about governance issues at these particular SOEs. It didn't name them specifically, but it did identify 5, which it says that it has major issues with, that being Eskom, Transnet and some others, which I forget for now. But anyway, that had the effect of a bit of a sell-off on the rand, but also the stronger dollar also played a part as well, although that has now since weakened. Markets have been very mixed, although for most of the morning, the all-share index was trading in pretty much negative territory. We see it up slightly today. In the meantime, we see that the oil price did tick up slightly. There is talk that Saudi Arabia says that it will be amenable to the idea of freezing output in order to control oil prices. Let's take a look at the indicators. I'm joined by Smit. He's from NEFG. Thank you very much for joining us, sir.
My pleasure.
Markets very mixed today. What are the main drivers?
Yeah, look, we saw Impala coming out with okay results and resources actually after a bit of a sell-off over the last week with interest rates talk in the States and depressed commodity prices pulling back a bit, but today commodities are actually driving the market a bit higher. You still have retailers in a bit of a slump after Mr. Price coming out yesterday with shocking trading numbers. They fell 18%, I think, yesterday, and they're down about another 10% today. So that's probably the two main areas of what the market's doing today. It's actually not done much on Future Growth's announcement. But yes, there's a lot of talk about that as well this morning. Okay,
we'll come to that shortly. On the Mr. Price issue, that is rather worrying because that particular stock has tended to be quite resilient even in hard economic times.
Yeah, look, it's amazing to see actually that the LSM bracket on the bottom end is looking at being the more difficult time, and it's probably where the layoffs and the trouble in the local economies were over the last few months, and they had a difficult and a late winter season which the timing wasn't totally correct on. So it would be interesting to see if all the others do follow that trend. We saw Woolies coming out with a bit of a concern on their clothing as well of a late winter, and they got their timing wrong a little bit. But we got great retailers in South Africa, and this might probably be a buying opportunity in the long run. But let's see where they actually go down to and turn.
All right. Tomorrow we see that non-farm payrolls are coming out, that US number very key for global markets. Do you think that's now going to possibly, if they are improved better than the market expects, do you expect that we'll get dollar strength and in turn interest rate hikes in the US in September?
Yeah, look, everybody's hinting towards that. I still think we're not going to have one. It's probably going to be stronger. The ADP report suggested yesterday that the growth of the job numbers will be good tomorrow, which is normally a leading indicator for that. But there's still no inflation in the system, and there's no demand in the system, and that's a global worry. And I don't think you want to kill off any hopes of inflation going forward. Then you have a Japan type of scenario, and I think the risks towards that is very, it's much greater than what the risks are of upping your interest rate a bit later than normal. Everybody's missing the other crucial elephant in the room that she actually said in a statement as well last week, and that is that negative rates are still a possibility. And I think everybody is just hoping for an interest rate hike. We don't think so.
Okay, you've touched on commodities already, but the oil price, Saudi Arabia talking about being amenable to fixing oil production. Iran has apparently said they could consider it, as well as Iraq. Do you think this is going to happen, that the conversation is going to happen in late September?
No. Look, there might be a conversation, but will it ever happen? I don't think it will. And I think they will pump more oil, and somewhere the market will find its feet, and some higher cost producers will disappear out of the market. So you're probably going to see the Saudis and those guys winning the battle in the long run, but oil prices need to go up for supply to be sustained. And at the moment, supply is falling away, probably a bit slower than expected, and demand's probably a bit slower than expected as well. So the equilibrium takes a bit of a longer time, but we bullish longer time with a medium-term horizon on the oil price.
Ultimately, everything kind of comes through the local currency, the rand, when we talk about all these factors. And we know locally this asset manager, Future Growth, decided that it's going to withdraw funding from SOEs. What are the implications of this particular move, and are we going to see others following suit?
I think you'll probably see others following suit. They probably already decided that they probably won't make a statement out there. There is a bit of a concern from a government point of view, a governance point of view of those 6 entities, and I think it's well known that everybody is a bit concerned about our president joining the committees and overseeing some of those SOEs, and there's not clarity on those issues. And if you manage other people's money, you certainly need clarity on governance, etc. Otherwise, you would not expose your clients' money towards those sectors. And I think it's the right thing, and it's a responsible thing of local assets managers to do. I think they probably will follow suit, and I think it's a nice way of private sector saying you still need to be accountable to South Africa. And I hope a lot of people actually go follow suit there.
But now, when outside agencies like ratings agencies look at this particular move, and assuming that there is a trend that comes out of it, how would that be read?
It's probably going to be read negative, but on the other side, I think it's positive to actually tell government that, listen, you can't just do whatever you want. There's some accountability somewhere in the system that we can actually hold you to, because without financing from the private sector, rates will go up. The cost of doing any capital injections or capital planning for those SOEs are just going to shoot the lights out. And you'll probably get it on the offshore market, but you're going to get it at a more expensive price. So there's a price to pay. And is it worth it to have less governance or more governance? I would hope for the latter and have more governance on some of these SOEs and more transparency.
All right, Herbrand, thank you very much for your time.
Pleasure.
That was Herbrand Smit. He's from NEFG. After the break, Francis has more news for you.